Well, hello everyone and welcome to Momentum channel. My name is Mo, and in this video, we're going to be talking about 5 high quality energy stocks with a dividend increase trend of over 9 years that are undervalued or reasonable valued at this time. Our first pick is Magellan Midstream Partners with ticker symbol MMP. It has a volatility beta score of 0.51, suggesting low volatility for this stock and a dividend yield of 8.69%. Magellan Midstream Partners has a dividend safety score of 61, making it a safe dividend payer. And if you look at their dividend growth history, they have been increasing their dividend over the past 20 years. And in all of those 20 years, they have been paying their dividend uninterrupted. The last time that Magellan Midstream Partners increased its dividend goes back to October of 2021, where they increased it by 1%. However, in the past 5 years, on average, they've been increasing it by 4% annually. As for the dividend payment frequency, Magellan Midstream Partners does pay it quarterly in the months of February, May, August, and November. And it has a payout ratio of 81%, which is edging higher for these type of businesses. Looking at the past performance for the Magellan Midstream Partners, the 1 year stock return is down by about 10%. 5 years return is down by close to 31%. However, the 10 per year return is showing a cumulative return of close to positive 39%. Our second pick is Enterprise Products Partners, ticker symbol EPD. It also has a very low volatility stock with a beta score of 0.37. Beta is a measure of volatility, and a beta less than 1 suggests less volatility than overall stock market. As for dividend yield for Enterprise Products Partners, we are looking at an annual yield of 7.7%. It has a dividend safety score of 65, making it a safe dividend payer, and it has been paying its dividend and increasing it for the past 23 years straight. Enterprise Products Partners does pay its dividend quarterly as well, and it is paid in the months of February, May, August, and November, and it has a payout ratio of 60%. It's worthwhile mentioning that for Enterprise Products Partners, it actually last increased its dividend in January of 2022, and it increased it at that time by 3.3%. However, over the past 5 years, they have been increasing their dividend on average by 2% per year. Looking at the past performance for Enterprise Products Partners, you're looking at the 1 year return of negative 5%, 5 years return of negative 9%, and 10-year return of almost stagnant, staying roughly at 0%. Our third pick here is TC Energy. It is available with ticker symbol TRP, has a low volatility score of 0.52 for its beta. It has a dividend yield of 5.48% and a safe dividend with a safety score of 61. TC Energy last increased its dividend in February of 2022, whereby they increased it by 3.4%. However, in the past 5 years, they have been increasing their dividend on average 9% per year. TC Energy has been paying its dividend uninterrupted since the past 21 years, and in all of those years, they have increased it year after year. It does pay its dividend quarterly, and it is paid in the months of January, April, July, and October. As for the payout ratio for TC Energy, we're looking at 52%, which is considered low for pipelines, giving a ton of room to continue to pay and increase its dividend for years to come. As for the past stock return, the 1 year return for TC Energy is down by 2.8%. 5 year return is up by 6.5%. And the 10-year return is showing to be close to almost 24%. Our fourth pick here is Canadian Natural with ticker symbol CNQ. It has a volatility score of 0.85 for its beta, which is considered average volatility. As for dividend yield, we are looking at 4.23%. It has a dividend safety score of 70, making it a safe dividend payer. But it's worthwhile mentioning that CNQ last increased its dividends in March of 2022, whereby it increased it by 28%, considering it a very fast dividend growth. Moreover, over the past 5 years, it's been increasing its dividend on average by 16% per year. Again, a very fast dividend grower in that sense. Canadian Natural has been paying its dividend uninterrupted for the past 20 years, and in all those years, they have increased it year after year. It does pay its dividend quarterly in the months of January, April, July, and October. Lastly, as for its payout ratio, we are looking at 25%. and it is appears to be edging higher for the oil producers type of businesses. If we look at the past performance of Canadian Natural, for 1 year, we are looking at an impressive 50.5% return, almost 51% positive return, 5-year return of almost 96%. And if you look at the 10-year return, we are looking at an incredible return of close to 114% plus, close to 114%, which is just remarkable in that sense. And lastly, we are looking at the fifth and final pick here in terms of the high quality energy stocks with a dividend growth streak of at least 9 years or so, which are undervalued or reasonably valued. And this one is no other than Phillips 66 with ticker symbol PSX. It has a low volatility of 0.69 for its beta and a dividend yield of 4.02%. Phillips 66 has a dividend safety score of 65, and it last increased its dividend back in May of 2022, where it increased it by 5.4%. Over the past 5 years, Phillips 66 has been increasing its dividend on average by 8%. And if you look at the dividend payment history, this business has been paying its dividend for the past 9 years uninterrupted, and in all of those years, they have increased it year after year. Phillips 66 does pay its dividend in the months of March, June, September, and December, and it has a payout ratio of 44%. What was interesting about this basket of 5 energy stocks is that by including them, in a sense, you would be collecting dividend income in all months of the year, given how their payment schedule varies between the months, and we have coverage for the months of January, February, March, and all the way until December. Looking at the past performance for Phillips 66, the 1-year return for this stock is at 6.4%, 5-year return of close to 19%, and 10-year return of incredible 182% plus. And just remarkable that we are seeing Phillips 66 before it is long-term amazing stock price returns. There you have it, folks. A quick look into 5 high-quality energy stocks that are considerably reasonably valued or undervalued at this time, and all of them have a long history of dividend payment and dividend increases, at least 9 years, and some of them upwards of 20 plus years. Hope you found this video beneficial and gained something of value from it. If you did, don't forget to smash that like button and subscribe to our channel. Here on Momentum Finance, we post every week several videos about investing, including investing in dividend stocks, growth stocks, and penny stocks. We also talk about ways to reach financial freedom. Thank you, and I hope to see you next time.